Michael Saylor of MicroStrategy just bought the dip in Bitcoin again for like the millionth time. But this time it's a $400 million junk bond that they sold in order to load the boat with more Bitcoin on MicroStrategy's balance sheet. In this video, I want to talk about MicroStrategy and kind of how they've morphed into this hedge fund for Bitcoin and how they've kind of wiggled their way through this whole no Bitcoin ETF existing. They're kind of a proxy ETF, and that seems like the direction that the company's going. But I want to talk about the financials and kind of my opinion on whether it makes sense buying MicroStrategy versus just buying Bitcoin. When it comes to the price of MicroStrategy, it really hasn't moved that much over the past 5 years, up until the end of 2020 when the price of Bitcoin exploded, and since they were holding Bitcoin, their stock price also exploded to the upside. If you're wondering what MicroStrategy actually is as a company, they're supposedly a data analytics company. But what's hilarious is if you go to their website, they actually have a Bitcoin button that if you click into, takes you to a website, hope.com, which looks like it's just filled with Michael Saylor interviews and then anything to do with Bitcoin. It's pretty obvious to see that Michael Saylor has put all of his eggs in this Bitcoin basket, because if you look at the financials, you'll see that the company itself hasn't really been doing too much. If you just look at the income statement from 2017 all the way to 2020, you can see the revenue has been flat or actually slightly decreasing year over year. And you'll see on the cash flow statement that over the years, the cash flow coming from the actual operations also really hasn't grown that much or has stayed flat. While in 2020, you see, boom, there's a $1.1 billion purchase of net intangibles, aka Bitcoin. If you're wondering how much does MicroStrategy actually have in Bitcoin, in mid-May they disclosed that they have about 92,000 Bitcoins, an average price of around $24,450. So that is about $2.25 billion worth of acquired Bitcoin. The beauty of following the numbers is you can clearly see MicroStrategy is no longer a data analytics company, but they've turned into a leverage fund for Bitcoin. Let's take a look at what the valuation of the company is versus how much Bitcoin they have on the balance sheet and kind of what their assets are to see, does this make sense to be buying MicroStrategy versus just buying Bitcoin? The company itself has a market cap of around $4.57 billion. If you take the Bitcoin as of mid-May of 92,079 Bitcoin, multiplied by the current price, you're talking about $3.3 billion worth of Bitcoin. If we look at the balance sheet at the end of Q1, the Bitcoin was valued at $1.9 billion. So if we take the difference between those and add to the book value, that's kind of the new book value that would be current today. So we subtract out this 1946582, add 3 zeros, and you would add this 1.3 billion to the current 365,038,000, and the book value would be closer to about 1.7 billion. So what it looks like to me is we're paying $3 billion for the company itself outside of the assets that are just on the balance sheet. Since the company itself doesn't really make a profit or isn't generating free cash flow, it just seems like we're paying a massive premium to buy MicroStrategy for the fact that they can keep on taking out loans to buy more Bitcoin. It just seems like there is a disconnect between what the value of the Bitcoin on their balance sheet is versus what you're paying for the actual stock. I think the reason behind this disconnect of valuation versus what's actually being held on the balance sheet is due to there's not really an alternative of an actual Bitcoin ETF, because the SEC is kind of just sitting on their hands when it comes to how are we going to deal with Bitcoin ETFs, because this is a whole new ballgame. You also have products like the Grayscale Bitcoin Trust, but that also has issues because it also trades at a premium. If you go to the Grayscale website and scroll all the way to the bottom, there's actually a disclaimer that says the trust has not met its investment objective, and at times the trust will actually trade at a premium versus the assets that it's actually holding, which is kind of scary to think about. Based on everything I'm looking at, it feels like MicroStrategy is really just trying to fill the void of a Bitcoin ETF. Once a Bitcoin ETF is approved, and if a company like Fidelity is running it, I would rather buy that Bitcoin ETF than use something like MicroStrategy where you have an underlying business that's not connected. They're using leverage and junk bonds to raise money to buy Bitcoin. It just seems irresponsible for the company. If there is a Bitcoin ETF, that way you can actually buy it in your Roth IRA, in your brokerage account, which I feel like is the reason there's a premium for MicroStrategy, is because It's the only way some people can get exposure without using something like Coinbase or Binance, any of those exchanges, to actually buy the physical Bitcoin, or I should say digital Bitcoin. So while I do appreciate Michael Saylor being an advocate for Bitcoin and being a Super Bowl and tweeting the price every 5 minutes on Twitter, that's besides the point, and I wouldn't touch MicroStrategy stock probably ever. In regards to Bitcoin or any cryptocurrency, I'd rather just own the cryptocurrency itself by buying it off of a centralized exchange or a decentralized exchange. Most importantly, don't forget to blast this link and video to Michael Saylor to get his rebuttal. If you did enjoy this video, give it a thumbs up and consider subscribing to Main Street Wolf, where we talk cryptocurrency, stock investing, options, anything to do with money. Thanks guys for watching, and have a great day.